Hello dear viewers and welcome to ChrisFX. You asked and I deliver one more time. We are gonna be talking about WYCKOFF plus fair value gaps in order to build a very good strategy which you can use in order to extract profits from the markets. Now I'm pretty sure that you have heard about those concepts about WYCKOFF and about fair value gaps, but I don't think that there are so many people out there who have combined those two things in a free video in order to help you get this edge that you have been missing. And I'm here to do that today with some examples, and for that we will be starting with our rules and with a WYCKOFF distribution, which we're gonna talk about what it is. Let's begin with the video and the rules of this strategy. And as you can see here, we are on TradingView, we are on replay mode, and in order to apply this strategy, you will first need to start from a higher time frame. I suggest that you start from the daily time frame, where you will be identifying some grab of liquidity or some order block, or this is a very bad B by the way, or an FVG of the daily time frame, and then within those things, within or after the grab of liquidity, or when price is within the daily order block, or when price is within the daily FVG, you will be scaling down to either the 5 or the 15-minute time frame. Okay, when you are in here, then 5 or 15-minute time frame in order to find your entries with the model that we're gonna be showing. Now this is a great model, not just because it works, but now you will be having a very clear template on what to be expecting before you enter your trades. So let's begin with this example right here. We are on Nasdaq. You can apply it on any asset, by the way. Don't go ahead and ask me 1,000 times in the comment section. But we are here on Nasdaq, and we see on the daily time frame that we are grabbing this liquidity that existed exactly right here. Why is that liquidity? Because this right here is a valid high. Higher, those two highs are higher than the high of the candlestick to the left, higher than the high of the candlestick to the right. So we have grabbed liquidity. Now you will tell me, Chris, how do I know not to enter when this liquidity was grabbed exactly right here? This is where WYCKOFF comes into play. And now guys, regarding WYCKOFF, you can go ahead and read everything about WYCKOFF. I'm gonna simplify it for you, and I'm gonna tell you right now, I'm gonna give you a secret. You don't need to learn this whole thing right here. You don't need to learn the different types of phases and what they mean. As an example, the preliminary supply, the buyer's climax, automatic rally. You don't need to learn all of those things, the upthrust, and all of those other semantics. I'm gonna simplify it for you, and I'm gonna tell you what to be looking for. Now, in order to make things even more clear, I will go to the 15-minute time frame, even though the 5-minute time frame would be working exactly the same. I'm gonna transfer those two schematics, which are showing a WYCKOFF distribution, a phase that you are trying to see if you're gonna sell, in other words, and the opposite would be with WYCKOFF accumulation. So if we would be having the opposite thing, we are gonna show it afterwards, you would be looking to find some form of liquidity or FVG of the daily or order block, and you would be seeking to see some WYCKOFF accumulation in order to buy. So now, because we are moving up and we are grabbing liquidity from the upside, we are looking to find some WYCKOFF distribution because we want to sell. Okay, so let's go ahead, transfer those a little bit more to the left, and let's try to go forward, to move forward and see if our schematics right here, those are pretty much the same thing, but I'm gonna bring them right here. Let's see how this develops, and when it develops, I will go ahead and show you how similar it is to the graphs that our friend WYCKOFF gave us a long time ago. Now, I have seen that it has already happened right here, but we will go ahead and explain it. Let's see the down move first. Of course, you have to predict the down move. Okay, but we will be starting with this thing right here, over here. You have grabbed the liquidity. Okay, you have grabbed the liquidity. I'm gonna delete that right here, or I can leave it because it can present itself in two ways, and I'm gonna simplify it for you. Let's do that. Okay, here we are. What do you see if you see those two schematics right here, the one that we see right here, right now on the real chart, and this one over here? What do you see from that? What similarity do you see? This preliminary supply where people are selling over here, they start selling their shares or the buy positions, let's say, it resembles this part exactly right here. Now the buyer's climax, you don't need to learn those things, okay? Forget about learning those things. It will be boring for you and you will skip the video and you will never learn it. I'm just telling you which step it resembles. It resembles this thing. The secondary test that we see here, it resembles this thing. Look how similar now this thing is. Now, regarding the upthrust over here, which again, I'm not gonna go ahead and analyze. You can go ahead and read about those things, okay? But I'm not gonna do it right here because I'm gonna be wasting your time and you don't need to learn what those things are exactly. If you want to learn about them, go ahead and study them. It is on the web, okay? So, regarding this thing now, you can either have an upthrust, okay, which goes above this area, so you can either have a break, then a retracement, and a second break above, and then you see the downfall, let's say, or you can just have an upthrust and then see the downfall. In order for you to be able to recognize this thing, I want you to remember the following. I'm gonna be simplifying it for you. What do I want you to remember? After you see this schematic on the 5 or the 15-minute time frames, okay, you see this schematic developing, all I want you to see now is an impulsive move up, which will grab this liquidity right here, and then an impulse down. The impulse down does not need to break below this area. You don't want to be missing the move. You want to be seeing an impulse up followed by an instant impulse down and the creation of a fair value gap on those time frames that we are referring, either on the 15-minute or the 5-minute time frame. And then you will be taking the trade instantly from your FVG and you're going to be riding it down. This is all I want you to see. So, we grab the liquidity from the daily perspective. Again, let's delete those now. We grabbed some liquidity from the daily perspective. You will be able, with this strategy, as I'm showing it to you, you will be able to avoid the false moves. Because, as an example over here, you would have never had, after this grab of liquidity, you would have never had a Wyckoffian, let's say, situation evolving. Over here, though, you grab the liquidity, let's assume you go to the 15-minute, okay, you go up, and here you start suspecting that something might be happening. So let's go back. We are here, okay, right here, nothing. So that's just a small retracement, okay. Then you say, wait a minute, you say, something might be developing. We grab this first liquidity, we retrace in the range. Then we don't go above this area. And we are still in the range. It resembles the Wyckoffian schematic. Are we going to be breaking above this high now with an impulse and an instant retracement? This is going to do it for me. Okay, here, again, we grab some liquidity down. Many people are shorting here. The best thing for price to do is to grab this high with an impulse, stop everyone out, retrace in the area, and short from an FVG. Let's see what is happening. Okay, beautiful. People here see that as a break of structure, so they start buying. And there we go, guys. Now, There you go. It is very easy now to say, look at that this resembles the Wyckoff schematic. There's no question about that. I can even do that, and you can see almost the same phases, but this is the UT right here. This is your UT, you can say. Okay, it resembles it. You see, we have an impulse up and impulse down. The impulse down, if you see it from the schematic, does not need to break those lows again. All you need to see is the creation of an FVG, impulse up, impulse down, an FVG right here, and you short it from here. That's what I want you to do. So now you have created the FVG already. You go ahead and you take your short from here. Now, if you're going to be super safe, the stop loss can go all the way up here. This is the point where your trade will be invalidated if it is, and you can go ahead and target whatever you want to target. You can target down there as an example, okay? And off you go. Price is leaving. Simple as that. Now, if we would be looking at the very same price action on the 5-minute time frame, okay, you would be seeing the very same thing. You would be seeing a preliminary move. I don't want you to get caught up in the little moves. Don't expect the schematic to be, let's say, created like that and you short it. I want you to see the clear phases. Okay, preliminary supply, let's say, the climax. We are moving within the area. We break impulsively, we retrace. So do we create an FVG on the 5-minute? Yes, we do. You could also be taking the trade right here, the stop loss right here, and you would be having the very same thing. Okay. You can target the lows as an example if you want to hold the trade for so long. A 6.5 to 1 reward to risk would be happening. Okay. In this occasion, on the 15-minute time frame, it is a little bit more clear. Let's say, if you are a beginner especially, you might get confused on the 5-minute time frame. Now, do I implement this thing in my trading? I would say, in a way, yes. I'm not waiting for those overall moves, let's say, of the Wyckoffian perspective, but I'm using a concept that I have developed which is very close. Let's say that the roots of my system are part of the Wyckoffian theory, the Wyckoffian perspective, let's say, or the Wyckoffian approach. So in a sense, I'm also using that on my day trading every single day, guys. And of course, I'm applying those concepts on a daily basis. Here you see one of my recent 25K accounts on Take Profit Trader, which I decided to give them a try. I was mostly a fan of my funded futures, but I have them, of course, on my website as number 2, Take Profit Trader. They might go at number 1. I have the website, of course, down in the description. You can go ahead to the best prop firms and check them out with the highest discounts also on instant funding accounts with Blue Guardian and Tick Trader. Okay. So this is an example right here from an account, a very recent account from June 11th until June 20th. I am following a similar approach to the Wyckoffian approach that I showed you, but a concept that I have developed the way that I have developed it. There is this concept is there in the market, of course, but not as I'm teaching it. So you see a steady growth curve and you see full success. And the very same thing happened in the challenge. Now, this money, of course, is withdrawable here. This is one of the accounts, and I also have a personal account that I have started trading with 0 losses until now. What I wanted to tell you over here, how can you join? You can join through WOP. If you want to join, let's assume my education, you will go to my website or wop.com/ChrisFXOriginal, or you can go to education, click on the education over here on my website. It will take you to the WOP page and you can choose either the signals or the academy or the mentoring. With the mentoring, if you choose the mentoring, you will learn my best strategy, the only one that I'm using, the one that resembles this one, but it doesn't have that many steps. It is way easier than this one. You will be learning it, and I'm gonna also give you free access to the signals and academy. So you pay this $199 and you also get free access in the signals and the academy. And if you don't want to pay the WOP fees, you can contact me at chrisangelstv@gmail.com and we can figure out another way such as crypto payment or PayPal payment so that you avoid all of the fees from WOP. Okay, guys, let's continue now and show an accumulation example. Now for the Wyckoff accumulation, in order to find an accumulation, of course, you can also find accumulations in continuation, don't get me wrong, or redistributions. So we showed an example where price was moving up, 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 and then it did something like that, and it reversed. So we showed the distribution like that. You could be having a redistribution, what people call a flag pattern, and the continuation. Now we will be showing the accumulation where price is moving down, and then we have something like that, okay, and then price reverses. You could be having a reaccumulation where price is moving up and it's doing something like that, and it goes, okay. But now I'm showing you very clear examples. Price is moving down from a daily perspective. It is grabbing clear liquidity, as we can see right here. And all we need to do is scale down either to the 5 or the 15-minute time frame. And here we are on the 5-minute time frame, and we will be waiting for this simple thing that we showed right here. Okay, some form of preliminary support, which could very easily be this one. Okay, because if you see it like that, the PS, if this is the preliminary support, then look, the seller's climax goes here. Then price breaks above, which this could be the automatic rally, a small retracement, and then this move could be this move. Okay, you need to see something similar. Don't overanalyze it. I can even place everything inside a box right here, guys. I can place everything inside a box. So let's see. We are waiting now for this low to be taken very, very impulsively, and then for a retracement in the range, let's say. Otherwise, you are not doing anything because dump money is buying here, they're getting then stopped out, then they're rebuying here, they will get stopped out, and they're doing all kinds of impatient stuff, let's say. Okay, now we continue. You are waiting patiently, and here you have your first move. Now, if you consider that the impulse down, and if there is an FVG, which there is, as I see it on the 5-minute, you could already take the trade here. And let's not fool each other, we are also going to be having losses with this thing, okay? My strategy has way higher success, by the way. This, theoretically here, you could have closed some wins, but for this strategy, you wouldn't be going just for an 1.5 to 1 because this takes time to develop. My strategy does not take as much time to develop and you will have many opportunities. But for this one, let's assume you had a loss over here. It might be in your rules to move the stop loss, so you could be at break even. But then you break again below this area very impulsively, which could be your spring. So this right here could be the ST in phase B, this right here, and the huge move down could be your spring. So now the real move might be coming. So let's see what is gonna be happening, guys. And here we already have an FVG. Price has come back to this area, has come back over here. And if I bring back my thing right here, you see that the test after the spring will happen instantly. So ST in phase B, it was here. If you draw a horizontal line, you see that it goes ahead and cuts over here. Now what we will be doing, instead of waiting for the schematic to play exactly, we can suspect that if this is the real move, we can take the trade from this FVG instantly, guys, okay? We can take the move from the FVG down there. Very good. Now we have extra confirmation that this will be the real move. So the trade will go here, and the safe stop loss is below the low, and you can target at least those highs right here, at least, okay? And I would suggest even more than that, this gap maybe, the top of the gap right there, for a 3-to-1 reward to risk. Okay. And off you go. This is your trade. And yes, you will be having some losses because you will never know if this is the real move. This could have been easily the real move. But you can implement also, let's say, some rules that when price goes to 1.5 to 1, you bring the stop loss at break even. In this occasion, you would have had a break even here and a full win of a 3 to 1 right there. Again, guys, this is the best thing that you can do. The Wyckoff theory works like a charm. I have taken the same theory and I have implemented it in another concept that it is widely known, but nobody out there, nobody literally uses it as I'm doing. And this is how I'm getting the statistics that I'm getting. Going live every single day, okay, every single day live, and I'm taking my trades live in the trading signals. If you choose the mentoring, you will be having the signals and the academy for free as well, a full package and full support by me, no question about that. If you buy any of the prop firms now over here, any account of my funded futures with the best codes that I have, Take Profit Trader, Blue Guardian, Tick Trader, not only you will gain access to giveaways, but you will be getting access to the signals for free. You don't need to purchase the signals if you purchase any of the accounts and you send me an email at chrisangelstv@gmail.com. I will be giving you access manually for free. Okay, guys? So do those things, learn from a transparent trader who is showing the wins and the losses as I'm doing on a daily basis. I'm not deleting any of my previous lives. Do not believe traders who are showing you bank statements. Those are things that can be faked very, very, very easily. Trust only the traders who are taking trades live and are sharing the trades live and are showing you the trades right before they happen. They even talk about what price is gonna do way before it does it. Live, guys, okay, only the live thing. We are living in a very manipulative, let's say, world, and everything is lately manipulated. There are creators who have relationships even with brokers, even with regulated brokers, and everything can be manipulated. What cannot be manipulated is the camera. The camera is always saying the truth, guys. So if I go live and if I share the trade with you live and if I take the trade live, this cannot be faked. So do yourselves a favor and go ahead and learn from the one and only one transparent, which is me. Like the video, subscribe, and turn on the notifications bell. Very important, otherwise you will not be receiving notifications from YouTube. And this is gonna do it, traders. I will see you in the next video.